The European economy is improving slowly but surely, but it is not enough.
So we're going to start off by looking at the European economy, and especially let's talk about the behaviour of the ECB. Can you tell us a little bit about what they've been up to?
The European economy is improving slowly but surely, but it is not enough. And the ECB will stay accommodative. The problem is inflation, because inflation in the Eurozone is still below 1%. So the ECB should stay accommodative. But in Germany, inflation is reaching 2% now. So people from the Bundesbank, Mr. Weidmann in particular, they want to put pressure on the ECB in order to stop the QE as soon as possible. So probably this year, in the coming months, not today, not in the coming days, in the coming weeks, but probably during the fourth quarter, Mr. Draghi will start to prepare the markets for the beginning of tapering in, let's say, 1 year. So the problem for European economy is the level of Bund, because if we assume that one day Mr. Draghi will announce the beginning of the end of this ultra-accommodative monetary policy, German yields are very low and they could climb. And in addition, the spread between the German Bund and the 10-year US Treasury is huge. It's above 2%. It's 210 basis points today. It should normally decrease from above 200 basis points to around 150, 160. So if we imagine that the 10-year Treasury could climb one day to 3%, and at the same time the spread with the German Bund decreases, there is more pain in the European government bonds than in the US Treasury.
So you mentioned the US Treasury there. Let's move over and talk a little bit about the US. What's the current situation with the Fed?
It's really unclear, because the Fed is caught between the statistics, which are relatively good. Of course, we can always debate around the normal figures and the official figures, because everybody knows that the real unemployment rate is far above 5%. But let's say that the official figures show that the US economy is brilliant. The big question mark is Mr. Trump's policy, Trumponomics, and how we will implement this policy, what will be the consequences. And today there is one major question: is Trumponomics today, is it shortening or extending the current economic cycle? And nobody knows. I think it could. This policy could shorten the economic cycle, due also to the strength of the US dollar, and due also to the US Treasury yield curve. So the Fed will probably stay on hold in the current months. The Fed could probably vote for one rate hike maybe in June, and there is also uncertainty around the Fed due to the composition of the board of the Fed, because there are 2 vacant seats. Mrs. Yellen will leave the Fed in 1 year, but also Mr. Stanley Fischer will leave the Fed in June. So we are waiting for new members nominated by Mr. Trump, and a lot of experts bet on the names of the new members. I bet on Kevin Warsh, who is Republican. He's been member of the Fed. He's been nominated by George W. Bush, but he resigned in 2011 because he was strongly against the QE policy implemented by Mr. Bernanke. So we still keep an eye on Mr. Kevin Walsh, because he could probably become one of the most influential members of the Federal Reserve.
And finally, let's have a little look at emerging markets. How have they been performing lately?
Emerging markets in US dollar, the performance is amazing. Year to date, it reaches, yes, it's above 3%. So in our emerging market portfolios, in our fund in particular, we decided to decrease substantially the weight of high beta names. We took profit on Russian bonds. We sold Turkey, Azerbaijan. We decreased the weight of Mexico and Colombia, and we bought some low beta names just to wait for a correction. And we bought some low beta names such as Latvia, Lithuania, Poland, Slovakia, and Romania, so Europe mainly.
Eric, thank you very much.
Thank you very much.
And thank you for watching. And remember, if you like this interview and would like to see more, be sure to head over to dukascopy.tv.